For years, the American crypto industry has operated under a cloud of legal uncertainty. The SEC's regulation by enforcement approach left investors and innovators in a constant state of anxiety. Projects hesitated to launch and exchanges delisted tokens at the slightest hint of trouble. The lack of clear rules stifled mainstream adoption and made every investment a gamble, not just on technology, but on unpredictable legal risks. At the center of this uncertainty was the SEC's lawsuit against Ripple, filed in December 2020, alleging XRP was an unregistered security. This wasn't just another enforcement action, it was a direct challenge to one of crypto's most established companies. The lawsuit sent shockwaves through the market. Exchanges delisted XRP, its price crashed, and billions in value were wiped out. The case became a symbol of the existential threat facing the entire U.S. crypto industry. For years, the legal status of nearly every token except Bitcoin remained unresolved, creating a market split between safe Bitcoin and everything else in regulatory limbo. The Ripple lawsuit was about more than XRP. It was about setting a precedent for the entire industry. Would the SEC's aggressive stance prevail, putting countless projects at risk, or would a new legal framework emerge? The outcome would either validate the SEC's approach or force a rethinking of how digital assets are regulated in the U.S. The industry's future hung in the balance, with every participant waiting for clarity. The fog of uncertainty was more than an inconvenience, it was a barrier to progress. The Ripple case would become the crucible in which the future of American crypto would be forged. The stakes had never been higher. The SEC's lawsuit against Ripple was a battle for the soul of American crypto. If the court sided with the SEC, it could unleash a wave of enforcement against hundreds of projects, stifling innovation overnight. The entire industry watched as Ripple chose to fight, arguing that XRP is not inherently a security and that context matters. Ripple's defense challenged the SEC's one-size-fits-all approach, pushing for a nuanced understanding of digital assets. The case became a rallying point for those frustrated with regulatory overreach. Internal SEC contradictions like the infamous Hinman speech suggesting some assets could become decentralized enough to avoid security status, fueled perceptions of inconsistency. The lawsuit exposed the lack of clear rules and the dangers of picking winners and losers. The outcome would set a precedent for how digital assets are treated under U.S. law. The industry's fate, and the portfolios of millions, hinged on the court's interpretation of decades-old securities law. Ripple's stand was about more than one token. It was about the future of crypto in America. The world waited for a verdict that could reshape the industry. On July 13, 2023, Judge Analisa Torres delivered a ruling that changed everything. She drew a crucial distinction. Ripple's direct institutional sales of XRP were securities, but programmatic sales on exchanges to the public were not. This was a monumental win for Ripple and a blow to the SEC's broad claims. The court affirmed that XRP itself is not a security. Retail buyers on exchanges had no expectation of profit from Ripple's efforts, a key point in the Howey test. The ruling meant secondary market transactions weren't securities offerings. XRP's price soared as exchanges relisted it, and relief swept the market. The decision set a precedent. The context of a sale matters. It was a victory for nuance over blanket enforcement. While Ripple was found liable for some institutional sales, the existential threat to XRP's public trading was neutralized. For the first time, a path to regulatory clarity for digital assets other than Bitcoin emerged. The fog began to lift, and the industry saw hope for mainstream acceptance. Judge Torres's decision became the new legal foundation for crypto in the U.S. After Judge Torres's ruling, only one issue remained: the penalty for Ripple's institutional sales. The SEC sought billions, Ripple argued for far less, and both sides wanted closure. In 2025, they settled the penalty was much lower than the SEC's initial demand. More importantly, the settlement locked in the precedent. XRP is not a security, and its secondary market trading is legal. This gave XRP a unique status, court-tested legal clarity unmatched by any other major digital asset. Bitcoin and Ethereum operate on informal guidance. XRP's status is now settled law. For investors, this means the risk of future SEC action against XRP's core nature is gone. XRP stands alone in a market still defined by regulatory risk. This legal certainty transforms XRP into a foundational asset for the future of finance. Institutions and investors can now adopt XRP with confidence unavailable elsewhere in the altcoin market. The Ripple case has split the crypto market in two. XRP now has court-affirmed non-security status for public sales. Every other asset, including Ethereum, remains in regulatory limbo. Ethereum's status is based on old speeches and shifting statements, with ongoing investigations casting doubt. Bitcoin, while widely seen as a commodity, lacks a definitive legal ruling. In high finance, the difference between assumed and adjudicated status is massive. XRP is the only digital asset to have crossed that chasm. This legal clarity is now XRP's defining feature, de-risking it for U.S. investors and institutions. The "is it a security" question is answered for XRP, letting the conversation shift to its technology and utility. In a market where regulatory risk has been the biggest barrier, XRP stands alone on solid legal ground. The rest remain on shifting sands. With legal status settled, let's compare XRP and Bitcoin on technology. Bitcoin pioneered decentralized value, but as a payment tool, it's slow and expensive. Transactions can take minutes or hours, and fees spike during congestion. Bitcoin excels as digital gold, not as a global payment solution. XRP was built for speed and efficiency in cross-border payments. The XRP ledger processes transactions in 3-5 seconds, with fees a tiny fraction of a cent. This makes it ideal for everything from large settlements to small remittances. XRP's utility is real. Financial institutions use it today to move money instantly across borders, eliminating the need for pre-funded accounts. While Bitcoin's Lightning Network aims to improve speed, it's complex and not yet widely adopted. XRP's performance is native, not layered. Now, with legal clarity, XRP's potential for adoption is greater than ever. It's not just incrementally better, it's orders of magnitude faster and cheaper than legacy systems in first-gen crypto. XRP is positioned to transform global payments. In institutional finance, risk management is everything. For years, regulatory ambiguity kept most U.S. institutions out of crypto. Assumed legal status is fragile, subject to political winds and changing regulators. Court-tested certainty, like XRP's, is robust and durable. It creates a legal shield against future challenges. For banks and payment processors, this is a game changer. With XRP, the question shifts from, can we use this, to, how do we integrate it? XRP is the first major altcoin to clear this legal hurdle in the U.S. This certainty will drive the next wave of adoption as institutions demand both innovation and regulatory safety. The Ripple lawsuit, though costly, gave XRP a unique advantage, a legal stamp of approval no other altcoin can claim. In the maturing crypto market, that certainty is priceless. The Ripple settlement and XRP's legal clarity are the catalysts institutions have been waiting for. U.S. banks and financial firms, once sidelined by regulatory risk, can now move forward. The first adopters will be agile fintechs and payment providers, integrating XRP for instant, low-cost remittances. Ripple's global partners can now expand into the U.S. market. Next, major banks will use XRP for internal settlements, then offer XRP-powered services to clients. Asset managers and hedge funds can now add XRP to portfolios, free from regulatory overhang. This institutional demand will drive sustainable growth, moving XRP beyond retail speculation. Legal certainty unlocks XRP's true potential as financial infrastructure. With legal clarity, two milestones are now within reach: a spot XRP ETF and a Ripple IPO. Bitcoin ETFs opened the door, but other crypto ETFs were blocked by regulatory uncertainty. XRP's court-tested status removes the SEC's main objection. Asset managers can now file for an XRP ETF, unlocking new capital from investors. Simultaneously, Ripple can finally pursue its long-awaited IPO, bringing transparency and legitimacy to the company. An IPO would provide capital for expansion and further entrench Ripple in global finance. The ETF and IPO together create a powerful growth engine for XRP and Ripple. This signals the end of regulatory ambiguity and the start of institutional-grade digital assets. For investors, it's a clear roadmap for future value, built on legal bedrock. In crypto's early days, value was driven by hype and speculation. Now, regulatory action is the biggest risk. Even the best technology can be crippled by a lawsuit. Legal clarity is now the most valuable asset feature. Think of it as the bedrock for building the future of finance. Regulatory uncertainty undermines everything. Legal clarity ensures long-term confidence. Investors must now ask, does this asset have the legal right to exist in the world's largest economy? Risk-adjusted returns are far higher for assets with legal certainty. As crypto matures, compliance will be non-negotiable. Assets that can't meet this standard will fade. Those that can, like XRP, will lead. In this new era, clarity is the ultimate competitive advantage. XRP's legal journey marks a turning point for all crypto investors. The old days of hype and regulatory guesswork are over. Legal certainty and real utility now drive value. The Ripple case gives us a new lens for evaluating digital assets. Don't take my word for it. Read the ruling. Understand the difference between assumed and court-affirmed status. Look at XRP's technology, speed, cost, and real-world partnerships. Ask which asset is best positioned to attract institutional capital. The facts are clear. XRP is now the leader in regulatory clarity. As you build your portfolio, consider the value of legal certainty. XRP has been tested and emerged stronger, safer, and ready for adoption. The future belongs to the clear.